Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the USDJPY which saw a sharp move on the higher side and it looks likely that it has changed its trajectory which was bearish for the most part of the week before the release of retail sales for the United States, and now it has changed its course and it is likely to move higher, so we will be looking for trading opportunities there. The US retail sales data has turned around the fortunes of the USDJPY. It was the laggard amongst all the major currency pairs of US dollar since the Tuesday CPI release. Now, all that is behind as USDJPY bulls have got a new lease of life thanks to the better than expected rise in United States retail sales numbers. I am expecting the USDJPY to hold strong for remaining part of the week. It will be better for us to start looking for opportunities to buy it on the dips. On the data slate, we had employment data for the Australia early in the Asian trading session. We saw job losses of 146.3 thousand amidst the outbreak of COVID, resulting in the restrictions on the economic activities. Still, the unemployment rate has continued to edge lower. In 10th straight month of decline, the unemployment rate was at 4.5% for the month of August, as the number of people looking for jobs also dropped as people are getting cautious of participating in public life due to the COVID spread. There were no major economic releases scheduled for the day for major European economies. For US, we had multiple data releases scheduled at the same time, resulting in sharp moves in related financial instruments. The US retail sales were higher 0.7% in terms of month on month and 15.1% in terms of year on year. The expectations were of a month on month decline, but US consumer spending is holding better than expected, and it is likely to only get better as the current COVID wave fades in coming months. The US initial jobless claims climbed higher to 332,000 from pandemic lows of 312,000 touched a week earlier. Market participants mostly shrugged off this rise as the trend line trajectory is clearly downward. Now we will consider the technical side of these financial instruments. First, we will consider the outlook for USD and afterwards we will also see what's happening in the equity space where the instrument of choice is Dow Jones Industrial Average. Let's start with the USD technicals first. This is the daily time frame chart, and here you can see that this time around the USD is reversing course exactly around the levels touched in the mid-August. If you consider this prior swing low, there is not much of a difference this time around, and the move has been quite sharp. We had this sharp decline after the release of USCPI, loss of almost 100 pips, and now half of those losses have been reversed in today's session with USD climbing more than 50 pips from the day's low, and it looks likely this trading range is going to hold well, and we can expect the USD to climb higher, if not far, at least toward this prior swing high, which is there close to 110. So for today's session as well as for tomorrow's session, I think it will be better for us to keep looking for the opportunities to go long, and for that mostly we will have to rely on the lower time frame charting where we can take the help of key technical parameters while deciding to trade. We have the central pivot point around this 109.8, and this is likely to prove a short-term resistance. And if we consider the price action so far, we have already seen the USD rising till this central pivot point, and afterward it has gone into a sideways consolidation mode now, and today it is not really likely to move higher than this, and I am expecting the USD to spend the rest part of today's trading session below this central pivot point, and it will be interesting to see how tomorrow the Asian trading hours the price action starts there, and if we have a move on the higher side, then in that case we can expect the USDJPY to climb higher toward this immediate swing high. The week's high can be retested again, but the probability is quite remote, and I think it will be better for us to go for a buy trade on the dips, not on the rise. So instead of looking for a breakout above the prior swing high or today's high, I think it will be better if we go for any long trade if we have any corrective move on the lower side. And as long as the USD is holding well above this immediate consolidation highs, the price zone of around 109.4 to 109.5 is likely to act as the near term support. So that is where the opportunities might lie if we want to take advantage of this emerging scenario. If you consider the regression curve, it has inclined on the lower side, and the only factor which is likely to help us in deciding for any long trade is that the price action has now entered the upper bracket, upper side, and it is holding above this middle band. So that is going to be a key marker moving forward also. And along with these factors, we can also take help of the SMA formation, where the 50 SMA is likely to provide short-term support on the lower side, or we can simply utilize it as a critical marker as long as the USD GPY is holding well above these consolidation highs, and that is where this 50 SMA is also around. So we can take both these factors in consideration while deciding to trade, and given the fact that these price zones, these price levels are quite similar, we can be quite clearer in our trading assessment. So here, watch out for the price moves around 109.5, and if we see the USD GPY holding close or holding above these price levels, in that case, the stop loss is going to be quite sharp. I think 20-25 if stop loss should be good enough, and on the higher side, the move toward these 200 SMA can be expected, and this is the price area where the central pivot point of this month's pivot point series also present. So it will be better if we go for the target price below that central pivot point, not above it, as we are not really sure if we are going to see the week ending higher. But given this sharp move in today's session, I think a buy on dip strategy can be adopted. So keeping that in mind, it will be better if we buy it closer to the lows and then try to sell it on the higher side. Now let's see what's happening in the Dow Jones Industrial Average. This is the daily time frame chart, and if you consider the price moves of the Dow Jones so far in the session, it has been a topsy-turvy session. We have seen sharp moves on the lower side. But if we consider the initial hour of today's session, we had the move on the higher side. First, the Dow tried to climb higher after the release of US retail sales, but it gave up all those gains and moved lower. And now, after getting close to this consolidation lows, again the buying momentum is creeping back, and we are seeing some buying on the lower side. So this is more of an range bound trading session, and we are not really likely to see any fresh breakout. So it will be better for us to take advantage of this range and try to go for any long trade closer to the low while looking for shorting opportunities closer to the swing highs. So mostly we will have to rely on these lower time frame formation, where we have these bearish formation on both these technical parameters. If we consider the regression curve, it is sharply inclined on the lower side. So we will do well to avoid any kind of swing trade on the buy side. If you are looking for any swing trade opportunities, in that case, it will be better to look for shorting it rather than trying to buy it. And for scalping kind of trading opportunities, you can trade it both ways. Only thing that needs to be kept in mind is this trading range, where we have seen the Dow struggling closer to 35,000 level on the higher side, whereas 34,500 has been the near-term support. And if we simply take this trajectory of higher lower highs and lower lows in that case. This time around, we can expect the move beyond these 34,500. But so far in the session, we haven't really seen that. So that possibility is still there. So it will be important for us to avoid any kind of buy trade now that we have already seen the dough retracing from day's lows and it is now again inching on the higher side. In this case, we can keep looking for shorting opportunities closer to these consolidation phase price zone of around 34,800 while keeping the stop loss beyond these days high. So for a risk of around 200 points, we can expect a move on the lower side below 34,500. So that is going to get us a risk reward ratio of 1 is to 2. So conservatively speaking, I think the risk reward ratio is good enough. And given the fact that medium term trend has now turned bearish, whenever we will have a breakout, it is more likely to be on the lower side. And in that case, we can indeed expect profits more than this our initial assessment ratio of 1 is to 2. So that's my take looking at the current price formation of the Dow Jones Industrial Average. If any of you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. For further coverage of the market developments, you can check out the Digoscopy Analytics page for which the link have been provided. The JForex platform provides a low-cost trading environment. We are also available on the Facebook. Do follow us there. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.